Investing in the stock market can be both exciting and daunting. While the potential rewards are high, the risks are also significant. Therefore, it's important to have a well-defined investment strategy that's grounded in solid research and analysis. In this article, we'll explore tips for investing in stocks, bonds, and funds that can help you build a winning investment strategy. Part 1. Investing in Stocks. Subtitles. Researching stocks. Where to start? How to analyze company financials. Growth versus value stocks. What's the difference? Picking stocks that fit your investment style. Balancing your portfolio. Diversification strategies. Detailed description. Investing in individual stocks requires careful research and analysis. To get started, you can use various tools such as stock screeners and financial news sources to identify potential investment opportunities. Once you have a list of companies to investigate, it's important to dive into their financial statements and analyze key metrics such as earnings per share, price to earnings ratios, and return on equity. You'll also want to consider the company's growth prospects, industry trends, and competitive landscape. When it comes to choosing specific stocks, it's important to select those that match your investment style. For example, if you're an income-oriented investor, you may look for stocks with high dividend yields. On the other hand, if you're more interested in growth, you may seek out companies with high revenue and earnings growth rates. Regardless of your style, it's important to diversify your portfolio across different sectors and industries to minimize risk. Part 2. Investing in Bonds. Subtitles. Understanding bond basics, types and terminology. Analyzing bond credit quality and yield. Building a bond ladder for income generation. Active versus passive bond investing. Balancing your portfolio, asset allocation strategies. Detailed description. Bonds can be an attractive investment option for those seeking income and capital preservation. However, investing in bonds requires a basic understanding of bond types and terminology. There are various types of bonds, including government bonds, corporate bonds, and municipal bonds, each with its own set of risks and benefits. When analyzing bonds, it's important to look at factors such as credit quality, yield, and duration to assess their risk and return potential. To generate income from bonds, many investors use a strategy called bond laddering. This involves buying bonds with different maturities and creating a schedule for selling them as they mature. This strategy can help provide a steady stream of income while minimizing interest rate risk. When it comes to investing in bonds, investors must also decide between active and passive bond investing strategies. Active strategies involve trying to outperform the bond market by selecting individual bonds. Passive strategies involve investing in bond index funds or exchange-traded funds, ETFs, that track a broad market index. To balance your portfolio, it's important to consider your overall asset allocation strategy. This involves deciding how much of your portfolio to allocate to stocks, bonds, and other assets based on your investment goals and risk tolerance. Part 3. Investing in Funds. Subtitles. Understanding fund types, mutual funds and ETFs. Active versus passive fund investing. Analyzing fund performance, metrics and benchmarks. Selecting funds that align with your investment goals. Balancing your portfolio, asset allocation strategies. Detailed description. Investing in funds, such as mutual funds and exchange-traded funds, ETFs, can be a good way to gain exposure to a diversified portfolio of stocks and bonds without having to pick individual securities. When selecting funds, it's important to understand the different types of funds and how they align with your investment goals. For example, index funds and ETFs may be better suited for passive investors who want low fees and broad market exposure, while actively managed funds may be better for those who want to try to outperform the market. When analyzing fund performance, it's important to consider metrics such as expense ratio, return on investment, and risk-adjusted returns. You'll also want to compare the fund's performance to a relevant benchmark, such as the S&P 500 for U.S. stock funds. To balance your portfolio, you'll need to consider your overall asset allocation strategy and how much of your portfolio to allocate to funds. Depending on your investment goals and risk tolerance, you may choose to allocate more or less of your portfolio to funds. Conclusion: investing in stocks, bonds, and funds can be a rewarding way to grow your wealth over time. However, building a winning investment strategy requires careful research and analysis, as well as a sound understanding of your investment goals and risk tolerance. By following the tips outlined in this article, you can develop an investment strategy that aligns with your goals and helps you achieve long-term financial success.